the stock market just keeps on moving up. What's causing the historic highs on the market? Should you still be investing? Let me walk you through what's going on and how to address the market's move. Good afternoon, everyone, and welcome to Trending Thursday on our YouTube channel. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Always my pleasure to be here on Thursdays. And riding side saddle with me is Joey. Say hi.
Hi.
That is my producer, and he's the guy that makes me look good on camera. If you can hear me, by all means, please respond in the affirmative to let me know that you can hear me, preferably with VV Nation. Let's go see the VV Nation pop up on the screen with all of the comments. VV Nation, stand up. All right, with that, glad that you're here. I put out a challenge to everyone going forward for our presentations. Each one invite one. Invite a person who's interested in the market to our Trending Thursday stories. All right, let them take a look at what's going on. Let them see what VectorVest is all about. Let them see why you guys are so excited about VectorVest. You can change somebody's life by doing that. And another part of that is, for those of you who are subscribers to the VectorVest software, you know we have a referral rewards program, all right? What's important about that is if you suggest or refer a person to sign up for a trial, if they sign up just for a trial, you get a free month of service. So for all of you who are out there, if you get 12 people to take a trial, now they've got to call into VectorVest and say that, hey, Jay Buckberg told me about VectorVest and I want to take a trial. If 12 people do that, Jay, I'm hooking you up. If 12 people do that, guess what, folks? You get a year of VectorVest for free. So just think about that, folks. And that's why I'm saying I want you guys to invite somebody. You guys could get, it becomes a win-win situation. You help somebody, and then those somebodies that you help, if they take a trial to the VectorVest software, you can get a free month of service. Now, that free month of service kicks in only when you are a paid subscriber to the software. So if you're on a trial right now and you haven't paid for at least 1 month of service, you're not able to do that. You have to have at least paid for 1 month of service in order to be qualified for the referral rewards program. Do you have an annual fee too, or just monthly? Ron, we do both monthly and annual subscriptions. All right. And Jay, put the phone number in for our product support if you want to give them a call. It's 888-658-7638 and my extension. And I'm not giving you my extension. Oh, heck no. Boy, my phone will blow up. Be like, hey, can I speak to Glenn? I'd be like, hello? Glenn? No habla español. No, he's not here now. And then I hang up the phone. So, give our product support staff a call. Joey is shaking his head, but there it is. Give us a call. Great product support. Boston was great help today. Boston is amazing in our product support team. All right, so again, I think that needs to be put out there. And if you're new to this channel, our YouTube channel, hit the subscribe button. If your subscribe button is red, that means you haven't subscribed to the channel. If you like the content that you see here, by all means, subscribe to the channel and smash the bell icon so that you can get alerted to all the upcoming events. We are podcastable, so if you go to your favorite podcast place, you can go find out where we are and listen to us by way of podcast in case you ever miss any of the Trending Thursdays. You go to something like Apple Music or what's that green thing, Joey? Spotify or any of those and search for Trending Thursdays. You don't Stitcher? All right. That's another popular one. You search for Trending Thursday. You don't search for VectorVest. You search for Trending Thursday, and you can get the live podcast. So again, welcome to all of you guys. Thank you for being here and supporting the channel. I know Jay says 23,000 subscribed and now there's 181 watching. This is rocking. Listen, I want you guys to invite somebody. All right. So with all of that being said, let's get into what we do here in Trending Thursdays. It's all about stocks that are making the news. We use the power of the VectorVest software to analyze these stocks and to make a better decision. Instead of just looking at the news, let's analyze the stocks. Let's also look at stocks that are in that same space. You might be able to find a different, more viable stock to look at, and that's what we do here on Trending Thursdays. I see you've managed to avoid COVID-19. Yes, I've been lucky. And I'll keep it that way, and hopefully that keeps on going that way. All right, let's get right into the software, Joey, and what we're going to do is we always start off with the market overview. And VectorVest has a unique way of looking at the market. We time the market. Now, when I say we time the market, we don't predict which way the market is going to go. We follow the trend of the market to keep our subscribers on the right side of the market at all times. So we start off here on our homepage. This is the VectorVest homepage. As we look, all of the major indices, with the exception of the S&P 100, are up today, but not running away gangbusters. The Dow is up 92 points. The NASDAQ is up about 0.3%. Our VectorVest Composite, though, is up over 1%. Now, for those of you who are new, what is the VectorVest Composite? Well, the VectorVest Composite is an indexed arithmetic average of all of the stocks that we track, and we currently track 8,433 stocks. We track that indicator, the VVC, or the price of all of these stocks, both on a week-over-week and a day-over-day basis. When we say that the VectorVest Composite is up, the indexed average of 8,400 stocks is up 64 cents today. Right now, it's up over 1%. This is like looking at the Dow 30 or the NASDAQ or the S&P, except for we're looking at the movement of 8,400 stocks in one ticker symbol. We'll go over to our market timing gauge, red, yellow, and green, just like you find on the traffic light. Our market timing gauge today is pegged right into the green, and VectorVest, from a guidance perspective, does advocate buying safe undervalued stocks that are rising in the price at this time. So from a market timing perspective, it's still okay to be in the market, but we do have an indicator called the MTI, or market timing indicator. This indicator looks at three indicators within the color guard: the price of the composite, the timing, the short-term price trend in the market, and the overall health of the market. When this indicator, which is cast on a scale between 0 and 2, is above the value of 1.5, 1.6, the market is looking toppy. I think we all know that the market is high. The market's just been running. It's been rocking and rolling, and we know that it's high. This indicator is a heads-up indicator to let you know, be careful with the trades that you put on. All right, so from the home page, that's what's going on. It's still okay to be in the market. Caution is still advised because the market is looking toppy. All right, and that's, wow, really, Mike Tyson's got a lot of stuff going on today. All right. So from a market timing perspective, it's good to go. Just be careful. The market is mixed today. Only the S&P 100 is down. But our master indicator, the VVC, is up over 1%. What do you do with all of this stuff? We'll talk about that. Why is the market looking like this? Well, that gets into our first story, which is always about the market overview. I'm going to go into my first story, and from the first story, let's talk about what the Fed is doing to keep the market the way that it is. All right, click on that one. Yeah. All right, well, I'm not on it. All right, let's click on that one. There we go. So our first story, maybe I wasn't supposed to be. All right, then Joey did it right. Oh, he did it that way. Well, how was I supposed to know? Wow, you know what that calls for? All right. So U.S. job postings end 2020 well below pre-pandemic levels. So we all know that the COVID-19 pandemic hit us. It hit us hard. It hit our economy hard. Jobs have slowly but surely started coming up. More and more people are looking for jobs. More and more people are getting jobs. But right now it still shows that it's at pre-pandemic levels, lower than pre-pandemic levels. It'll get better. All right. But it is what it is. If I scroll down, where's the mouse? There we go. If we scroll down, the U.S. unemployment rate shot up faster than any other developed country during the pandemic. Well, we got a whole bunch more people than a lot of people, with the exception of China. Wall Street Journal explains how differences in government aid and labor market structures can help predict how and where jobs might recover. So that is the story. That is the story. The number of help wanted ads increased more slowly in December, evidence that the market is losing momentum amid rising coronavirus cases. Available jobs posted online were down 10% at the end of December from a year earlier, according to Indeed's measure, Indeed.com. There's a lot of good companies out there, people to go find the jobs. Postings rose at the end of November when the number of available jobs was 11%, still below 2019's trend, but the pace of improvement has eased since the summer when businesses started to reopen after the spring lockdowns. So what has happened since then up until right now, it was the lack of stimulus. A lot of people, a lot of companies still are going out of business with the lack of stimulus. There was a new stimulus package that was released. I don't know what the numbers were for amount of checks or aid for small businesses. I know that as individuals, everyone got stimulus. You got your stimmy? Your stimmy of $600 per person and extra for about families. So keeping all of that in mind, that's where we stand. Now, that's the jobs picture. Now, let's go over the Fed. Mester says Fed policy set to an appropriate level for a year ahead. I believe that we're going to still continue to have an accommodative Fed to try to keep the market going as best it can. All right. The Fed already way back towards the beginning of the pandemic said they're going to pull out all of the stops that they can use to keep the economy going. And I think that the accommodative Fed is still going to be what's driving the market higher. There was a story that just recently came out that inflation rose a little bit. Inflation rose 0.4%. And right now they are giving a wider gap on inflation than they normally do for the economy to still be accommodative to what's going on in the market. So keeping that in mind, we all know that inflation, we can't let it get out of hand because prices will go up and go up and go up, and the Fed's got to then step in to raise interest rates to slow it down. I don't think that they want to raise interest rates, especially with all of the money that's out there. We've made, and this is a conversation for another time, we've printed a lot of money. And if we actually paid the interest rates, or higher interest rates on that money, I don't know what would happen. All right, so I'm just putting that out there again. It is a story for another time. Probably sit down with a few of you over a beer, eating a steak, to really talk about that. But keeping in mind that the accommodative Fed is going to allow a little bit more room for inflation. We just saw what's going on with the jobs. They're slowly recovering. They're still at below pre-pandemic levels. Keeping all of that in mind, how should you trade this market? So we understand what's going on in the market today. We understand what's going on behind the market with jobs and what the Fed is doing. Now let's take this into practical application to help walk you through what to look for. So I'm going to get back into the software. I'm going to go to our watch list of stocks that we're going to take a look at today. So here's all of the stocks that we're going to look at today. But we always start off from a market timing perspective, 2 indicators. The spiders, for all of you who do not have the VectorVest software, from a purpose of looking at what's going on in the market. And then for those of you who are subscribers, we look at that indicator, the VVC. I'm going to pull both of these up on a graph, all right? And if you're trying to figure out what to do in the current market situation, I'm going to tell you, the market's still running. I've got on my graph a 20-day exponential moving average, which I think is a great middle-of-the-road moving average to look at. The S&P 500 is trading above that. I've also got support and resistance on here to see where the S&P is in relation to the most recent level of resistance or the most recent level of support. Currently, for 1, 2, 3, 4, 5 days, the S&P 500 is moving sideways, having a hard time breaking above this high of 379.86. Oh, that wasn't the high. It was the high. Why is nope, there's the high. The high is 381.49. So in order for me to say that this market still has legs to the upside, it's got to break above that high. The market is still running because of a new administration is coming in on January 20th, all right? I'm not guessing about that. That's now etched in stone. It's going to happen. For any of you who feel that I'm slighting you in any different way, you need to get over it, all right? Plain and simple. That's going to happen, and I think going along with that, I think that there's the idea that we're going to get more stimulus. All right, and if that happens, that's going to keep driving the market higher as well. But what does that also do? We still print more money to provide more stimulus. I just don't want you guys to lose sight of that. There's a lot of money. There's trillions of dollars out there in debt, national debt that's out there. Don't lose sight of that. So that's looking at the S&P 500 over the last 3 months, definitely moving higher. Let's go look at the VectorVest Composite. Wow, look at that. That even looks better. Remember, this is tracking the movement of over 8,400 stocks. It's running higher. Beautiful level of that 20-day exponential moving average, keeping the trend intact. And all of the indices, whether it's the VectorVest Composite, the Dow, the NASDAQ, the S&P, are all hitting historically new highs. All right, so from trading this market in this perspective right now, my biggest thing to tell you is buy only on up days. Buy only on up days. Don't back up the truck and put all your money into the market, especially knowing that the market is high. The market is high. The market is toppy. How do we know when the market's topped out? When it stops going up and it starts going down. But that indicator, the MTI, is telling us that the market is at a point where it's looking for a top. All right, so let's go. Are there any questions in regards from a market timing perspective? I see a lot of stocks coming out here. There's going to be a time for that. I'm not ready to look at those yet. But any questions in regards to what's going on in the market? What's the prediction of Tesla short term? Again, I'm not ready to talk about that. Hi, Glenn. I'm here from London. Hope you have an answer for my question last week. WI for COVID-19 stocks. Oh, yeah, I could not make a watch list. I couldn't find enough stocks in the UK to build a watch list for the UK. I did a little bit of work. I didn't put a lot of time into it. I cursorily looked over it, but I couldn't find enough to make a real watch list in the UK for coronavirus. My suggestion is if you are in a different country, and the majority of the people who are in different countries that use the VectorVest software will use the American stocks. All right. Should we start selling some stocks who are already 52-week high? Harpreet, no. My suggestion on those stocks is use your stop criteria. Let your stops manage those trades. That's a great question, though, because a lot of stocks are up and they're making money and you're up a lot and you're wondering when to get out. Let your stops manage the trades. Let your stops manage the trades. And Jay, that BSR where it is not at historically highs. Back in 2003, I believe the buy to sell ratio was up at a level of 14, 15, 16, way up there. All right, so these are not historically high levels on the buy to sell ratio, but it is high. And that BSR almost at 10 tells me for every sell in the system, we have 10 buys. The market is definitely looking for a top. All right. How would you trade Moderna again? Again, individual stocks we're not going to touch on just quite yet. All right. So it looks like that is all of the questions in regards to market timing. Does that mean for the long-term portfolio regarding stop losses? No, I'm all about stop losses, whether it's on a long-term portfolio or short-term stocks. Stops are important. So I won't pigeonhole it into just my long-term holdings. I'm going to use stops even on my trades. Even on my trades, I'm in some speculative trades that are up 50, 60, 80, 90%, but I'm still using my stops to manage those stocks, not to give it all back, So stops are important, whether you're trading, whether you're swing trading, or whether you're long-term holding. There's no ifs, ands, or buts about it. All right, so if you like this content, guess what? You can join us live every Thursday at 2 p.m. here on YouTube. Join VV Nation. We hope to see you there.